Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Tuesday, February the 12th. Another non-eventful day yesterday. We had an inside day on a closing basis from the previous day on Friday, after that big gap up on Friday. And partly that I really do agree that this was due to a lot of traders not coming in on Friday, a very low volume trading day. However, the markets did manage to gain some momentum to the upside, and ever so slightly, and then it actually closed up higher, as we all know, on Friday. Yesterday really was non-eventful. It was so quiet. I have to tell you that this has been the quietest I've seen in a long time. Markets just grinding higher all of January, sitting up at these upper level ranges, and looking for some sort of direction. I think that's what the market's looking for. March 1st will be a big thing with what Congress says with the ceiling, debt ceiling. But right now we have to look at what we're doing and what we're trading on a consistent basis. And today, honestly, nothing has changed at all. I'm going to quickly run through the charts. There's really not much that I can say about where we are technically. We're at upper level of resistance. We're sitting here consolidating. Now, that's not a bearish thing. That's actually a bullish thing, a bullish trade setup. However, markets are tired. I could see them. I could see it. Our indicators, I could see price action during the day. So it's best, if you are trading during the day, look for the best quality setups, and I keep saying that, and see where the markets are headed in the direction of where the stock you're trading. If the markets are up, we are in an uptrend, as we all know, long-term uptrend, and in the short term, we do have a market bias to the upside. If you do like to short, I would be shorting relative weakness. I wouldn't be looking to short strong stocks, especially in this type of market. And a lot of times the algorithms during the day, they go nuts. And especially in this type of environment when there's no sellers to be had, they just turn the box on and markets go crazy. So just please keep that in mind when you're trading it. And also make sure you keep your stops in place. It's very critical. So what do we do in this type of dull market? Well, we take the best setups, and if there's nothing to do, there's no reason to do anything. So set aside a plan at what you need to do to prepare yourself for the next day, and that's what I'm usually doing. A lot of research, talking to different traders, getting some sentiment ideas, getting a feel for what's happening or hopefully what is to come. And that's really what the bottom line is, the best way to prepare yourself, because when the markets do pick up volatility, the last thing you want to do is getting chopped up prior to that, because then you're going to be scared and you're not going to want to really participate because you've been beaten up already. So it will happen. It will happen. The markets are not going to just go up straight up and or consolidate and go up again. They do pull back, and it will happen. Markets will pull back. It's going to be healthy for a pullback. Even if you have a 4% correction, the markets are still going to be in an uptrend. So I think everybody's also looking for that pullback, and that's why it hasn't happened yet. So the markets are usually made to fool the masses. So, and that's what's really happening here. So just, keep your palates dry. If you take a setup, a couple of small little stops, that's what you want. Take small stops, and whatever gain you have, take them, tighten your stops up, protect them. Don't turn a winning trade into a losing trade. That's just the worst thing that anybody can do. All right, so real quick, I just wanted to make note. Dow was down 19. S&P was basically flat, down 92 cents. NASDAQ down 2. Now, on the NASDAQ, I'm liking technology here better and better. And, obviously Apple was a big way on the technology sector as well as the market itself. Apple had a decent little day, a little push up again. But again, I think Apple needs to come back, consolidate a little bit. But we'll see. I think with Goldman Sachs tech conferences today, we'll see if Apple announces anything significant. All right, so anyway, let's go right into our indicators. I only have a couple today, but I want to just show you. Look at the NYMO, down 7, up 3 the previous day, absolutely doing nothing. And that means that, as you know, we can go higher or we can go lower. And here's the S&P. We're just sitting right at the upper end of the range here. Okay, just want to show you the VIX. VIX, nothing going on in the VIX here. As you can see, we're back down below record lows. We're back below this long-term horizontal trend line. VIX is showing us total complacency. However, now let me just show you what I did see. Yesterday, we had a nice little spike up. We had a spike up, up 110, and now we had another spike up to the 107 area. So there are put buyers out there protecting themselves. And this here is telling me that I think that reasonably a lot of traders and investors saying, "Hey, listen, this just can't happen, every day." And it's true. And if I'm not long, I'm just trading for the day right now. But if I was swing trading or I was a long-term investor, I would definitely be buying protection. Now, hedging, obviously, when you hedge, you're supposed to lose your money on your hedge. So I had a question yesterday, as a matter of fact. So I want to hedge, but what about if I lose money in my hedge? But that's the point, is that you're buying insurance so that when the market does come in, your portfolio is not going to take a shock, and then you can ride that storm out. Again, some people don't like to hedge, but this is premiums are very, very cheap. But if you see starting to run up above the 120, 125 area, that's something to be a concern about. As far as just you can see that fear is starting to creep into the market. Right now, no, but you can see that we have an uptick here in the put-call ratio. All right, so let's take a look at the dollar. Now, the dollar is interesting because I did mention about we have a head and shoulders pattern here, right head, left shoulder, right shoulder, and we have a neckline coming around 79. We also have some sort of a descending trend line triangle, if you can see here. Our dollar S&P ratio chart is still trending lower, but watch this break up higher. Let's see if this could break higher. If the dollar breaks higher, I think short term will put some pressure on equities and commodities. Longer term, I think the dollar will start following suit of what equities are doing. But right now, we still have that inversely correlated effect, so just keep an eye on that. Again, we have the 200-day moving average up here at 90, at 88, 90. So that's going to be a little bit short-term resistance up there. But let's see if the dollar can muster a little bit of momentum to the upside. That's really about it with the indicators. Let's go right into the charts. And just to show you, this is exactly what we're dealing with here. Just absolutely sideways consolidation, inside day to Friday. And then if you look back here, we have the same thing. We have consolidation here, and then we dip lower, and then we had a breakout. And if you go back, it's the same thing. Consolidation, here, we break out. So it's consolidating, and then it breaks out. Consolidates and breaks out. That's not good trading. That's not something that I'm looking for on a regular basis, what I would like anyway. But as you can see here, guys, absolutely nothing going on. Even on Friday, we had a two-handle range all day on Friday. Yesterday was the same exact thing. So I have some numbers what I want to show you. Here, actually, well, I'm sorry, the Qs, I don't know why I got the Qs up here. But anyway, here's the spiders. Spiders were in this upper end of the range. We're still in this longer-term trend line, and we got this inner channel within the larger channel. And as you can see here, which is kind of meandering around at the upper end of the range. And we have 149.50, 149.75, 20-day moving average. That's going to be your low. And our high, let's call it 152. 152 would give me enough to say that we are breaking out to the upside. And then, of course, 155 would be this upper end of this channel, would come in right around the 154 or 50, 155 area. That's in the spiders. Let me just show you a 60-minute chart here of the S&P. 149.80 would be your support, and of course resistance would be 152, and that's going to be on spiders if you're following. Slight little negative divergence here, but again, negative divergence is not a sell signal. We need price to start breaking down, making lower lows and lower highs in order for us to get really excited about any downside resolution. And here is let me just move this out of the way for now. Here's the S&P, and here's my targets here, as you can see. 1495 is support. 1520 is going to really act as resistance up here. Now, if we break 1520, you're going to have 1525, 1530 would be your first pivot, and then of course we have the all-time high of 1575, and I showed that to you yesterday on the monthly chart. So that's where we're sitting at right now. And as you can see, look at this choppy formation in the channel. Now, again, this is not a bearish formation at all. This is actually bullish, and you can see the CCI started breaking back up again. Now, we had an inside day to Friday, but these are going to be my targets. My first target's going to be this big area of resistance, which is now support, and this is going to be a big. Even if we get down to 1475, it's going to be very difficult to break through that unless you have some sort of catalyst. And then obviously your next target would be down in this area here, 1435, 1420. But these are my targets. These are the areas that I wanted you guys to keep an eye on during the trading day. Here is the S&P 60-minute, big, large, rising wedge. And again, 1495 right here, just below S3. And as you can see here, we do have our momentum indicators. We did break up, and then we're kind of back testing it now. So something to keep an eye on, but that is exactly what we're looking for. As you can see, look at our Bollinger Bands on a 30-minute chart. Bollinger Bands here really starting to tighten, so just use a little caution. There is usually some sort of a breakout resolution. It doesn't tell you what side, either up or down, but it is telling us that we're starting to pinch, that we're building energy here on a 30-minute chart. So just keep an eye on that. And as you can see, we've been in this range for the last, I don't know how many trading sessions. Okay, take a look at the transportation sector. Doing quite well, holding on its own here. We have this trend line here, this chart. Let me just get this. This is really where it should be. Right up in here. And you can see we're just kind of walking that lower trend line here. Again, upside target, a 105.75 break higher. I'm looking for a downside target of 102.35 to break and close. All right, our indicators are still here, kind of just pushing around here. And as the market in these sectors stay in this channel, you'll see an unwinding of these overbought readings, and that's going to be a bullish thing if we don't break any of these downside targets here. Okay, same thing with the diamonds. Same thing, guys. Nothing has changed here, as you can see. Inside day for the last at least 2 weeks trading here. Up, down, up, down. IWM, same thing, no different. Now, we do have, let me just move this over. We do have a new high here that was made, and that's going to be the high. That's going to be the breakout. Here, I'm still looking for an 88.50 break lower and close for me to consider any type of short in the IWMs or the Russell 2000 or any of the small cap stocks. Right now, they're pretty hot right now. A lot of small cap bios, solars, they were actually doing quite well. Okay, Apple. Let's take a quick look at Apple. As you can see here, nice move up yesterday as well. We did get a little bit of follow through. But again, here to me, this is just a trading stock right now. We did have a nice little move higher, and it's just kind of, you can see if you will, just kind of channeling up into the 20-day moving average. So can it break to this upper end of the range at 500? Sure it can. I mean, it's only 20 points for Apple. That's 1 day's ATR. But yeah, somewhere around this area here, I'd like to see if it does pop lower. Today's going to be a big day. I think their Goldman Sachs Tech Conference is today, and we'll see what Apple announces. If they announce anything significant, then I think you have a possible trend change. If they don't, I think they sell them off. They sell the news, because this was based on last Thursday, last Friday. Einhorn came out saying they're suing Apple because they want to relinquish some of that $1.34 billion they have in cash and return it to some of the shareholders. So let's see what happens. But again, this is going to be a news-driven stock. But if there is a positive catalyst, then I could see Apple starting to return back above the 500 area. Okay, and then we have the XLK, and this is what I wanted to show you. Let me just bring out the Qs real quick. As you can see here, we've been in the consolidation range here, which is actually really bullish. Okay, and of course, partly due to Apple, but we broke out of this range and we're just sitting here. A lot of tech stocks are actually starting to look pretty ripe here for a big move higher. And here's the XLK, the technology sector ETF. And the same thing, looking exactly the same as the Qs. It mimics the Qs a lot. But as you can see here, this is actually starting to get a little more legs than the Qs. So this is something to look for. Watch out for the technology sector. I have some commodity ETFs I'm looking at too, such as the coal sector, doing quite well. And of course, solar was on fire yesterday, but nothing really actionable that I want to put out. So I have a bunch of stuff that I'll be putting out. Once the market starts to move again, I'm going to also point out sort of like chart of the day, sector of the week. So you guys that are trading, it'll help you get some trade ideas. All right, guys, have a great day. We'll talk to you tomorrow. Hopefully the market gets some movement today. Take care.